Most people in the UK are paying more tax than they need to, and they don't even realize it. If you're saving or investing without a stocks and shares ISA, you could be handing over thousands of pounds to the taxman over your lifetime. The good news? You don't need to be rich, experienced, or a finance expert to fix this. In this video, I'm going to walk you through exactly how a UK stocks and shares ISA works in 2026, step by step in simple terms, so you can start investing the smart way. If you are new to investing or just curious about how to grow your savings tax efficiently, you are in the right place. We'll break down everything you need to know, step by step, making it super easy for you to get started. So, grab a cuppa, sit back, and let's dive into the world of investing through stocks and shares ISAs. Alright, so first things first, what exactly is a stocks and shares ISA? Well, ISA stands for Individual Savings Account. It is a special kind of savings account in the UK that allows you to grow your money without paying tax on the gains. There are different types of ISS, but today, we're focusing on the Stocks and Shares ISA. It is designed for people who are interested in investing in the stock market. Now, why should you consider a Stocks and Shares ISA? The main advantage is the tax-free growth. Any profits you make from your investments in this account are completely tax-free. Plus, any dividends you receive from your stocks are also free from UK tax. That is a huge benefit if you are looking to grow your wealth over time. Okay, let's talk about how much you can invest. For the tax year 2026, the ISA allowance is £20,000. This means you can invest up to £20,000 across all your ISA saving, whether it is a cash ISA, a stocks and shares ISA, or any other type. But remember, this allowance doesn't roll over, so use it or lose it by the end of the tax year. Let's start with the basics. A stocks and shares ISA is a tax-free investment account available to UK residents. Any money you make inside it, whether that's growth, dividends, or profits, is completely free from income tax and capital gains tax. In 2026, you can invest up to £20,000 per year across all your ISAs, and once that money is inside the ISA, it's protected from tax forever. Now, here's what a stocks and shares ISA isn't. It's not a single investment, and it's not a get-rich-quick scheme. Think of it as a wrapper that holds investments like funds, ETFs, or shares. The wrapper gives you the tax advantage. The investments inside determine how your money grows. Step 1. Choose a stocks and shares ISA provider. As a beginner, look for 3 things: low fees, an easy-to-use app, and access to diversified funds. You don't need fancy tools, simplicity wins. Step 2. Decide how much to invest. You don't need thousands to start. Many platforms let you begin with as little as £25 or £50 per month. The key isn't the amount, it's consistency. Investing a small amount regularly is far more powerful than waiting years to invest a large lump sum. Step 3. Choose beginner-friendly investments. For most beginners, global index funds or ETFs are the safest starting point. These funds invest in hundreds or even thousands of companies worldwide, spreading your risk. Instead of trying to pick winning stocks, you're investing in the global economy itself. This is how most long-term investors build wealth. Step 4. Invest regularly and ignore short-term noise. Markets go up and down, that's normal. The biggest mistake beginners make is panic selling during dips. A stocks and shares ISA works best when you invest for the long term, ideally 5 to 10 years or more. Time in the market beats timing the market. Step 5. Understand the risks. Your investments can go down as well as up, especially in the short term. That's why a stocks and shares ISA is best for money you won't need immediately. If you need access in the next year or two, cash savings are safer. Now, let's talk about why this matters so much. Outside an ISA, you may owe tax on dividends or capital gains. Inside an ISA, you owe nothing. That difference compounds over time. 2 people can invest the same amount, earn the same returns, but the one using an ISA ends up with significantly more money simply because they avoided tax. In 2026, with rising living costs and uncertain pensions, learning how to use a stocks and shares ISA isn't optional, it's essential. It's one of the most powerful beginner-friendly tools available to everyday people in the UK. If you are just starting out, remember this: you don't need to be perfect, you just need to start. Open the account, invest small, stay consistent, and let time do the heavy lifting. That's how long-term wealth is built in the UK, quietly, legally, and tax-free. So, how do you get started? First, you'll need to choose an ISA provider. It is important to do your research and find one that suits your needs. Look for a provider with low fees, a good range of investment options, and a user-friendly platform. Once you've chosen your provider, it is time to open your ISA account. This process is usually straightforward. You'll need to provide some personal information, like your national insurance number and proof of identity. Once your account is set up, you can start transferring money into it. Now comes the exciting part, Teva: choosing your investments. A stocks and shares ISA allows you to invest in a wide range of assets, including individual stocks, bonds, mutual funds, and exchange-traded funds, or ETFs. If you are a beginner, it might be wise to start with a diversified portfolio. This means spreading your money across different types of investments to reduce risk. Let's break it down further. Stocks, or shares, represent ownership in a company. When you buy a stock, you become a part owner of that company. If the company does well, the value of your shares can increase, and you might receive dividends. Bonds, on the other hand, are like loans you give to a company or government. They pay you back with interest over time. Mutual funds and ETFs are collections of stocks and bonds, managed by professionals. They offer instant diversification, which can be a safer choice if you are not ready to pick individual stocks yet. With ETFs, you can buy and sell them like stocks on the stock exchange. It is a flexible option that many investors like. As you start building your portfolio, keep your investment goals in mind. Are you saving for retirement, a house deposit, or maybe a big holiday? Your goals will help determine your investment strategy. Also, think about your risk tolerance. How comfortable are you with the ups and downs of the stock market? Knowing this will guide you in choosing the right mix of investments. Remember, investing is a long-term game. Markets can be volatile, but historically, they've trended upwards over time. It is important not to panic when prices fluctuate. Instead, stay focused on your long-term goals and try not to check your portfolio every day. Patience is key. Now, let's talk about costs. With a stocks and shares ISA, you might encounter a few different fees. There could be account fees from your provider, dealing fees for buying and selling stocks, and fund management fees if you are investing in mutual funds or ETFs. These can eat into your returns, so it is crucial to understand what you are paying for. Look for a provider with transparent pricing and compare their fees. Sometimes paying a bit more for a platform with excellent customer service or a broader range of investment options is worth it. Always weigh the costs against the benefits before making a decision. Once your investments are set up, it is essential to review them regularly. Check in on your portfolio every few months to see how it is performing. Are you on track to meet your goals? Do your investments need rebalancing? This means adjusting your portfolio to maintain your desired level of risk as market conditions change. Rebalancing might involve selling some investments and buying others to keep your portfolio aligned with your strategy. It is a good idea to review your investments at least once a year. Some platforms offer automatic rebalancing, which can take the hassle out of this process. Now, let's address a common question of Twend. Can you lose money in a stocks and shares ISA? The short answer is yes. Investing always carries risk, and the value of your investments can go down as well as up. However, the potential for higher returns compared to a cash ISA makes it a compelling option for many. To mitigate risk, diversify your investments. Don't put all your eggs in one basket. Spread your money across different asset classes, sectors, and geographic regions. Diversification is one of the best ways to protect your portfolio from significant losses. Another great tip for beginners is to invest regularly. This strategy is known as pound cost averaging. Instead of investing a lump sum all at once, you invest smaller amounts at regular intervals. This approach can help smooth out the impact of market volatility and reduce the risk of making poorly timed investments. Let's say you decide to invest £100 every month. When prices are high, your £100 will buy fewer shares, but when prices are low, you'll get more shares for your money. Over time, this can lower your average cost per share and potentially enhance your returns. And hey, don't forget about the power of compounding. This is when your investment earnings generate even more earnings. It is like a snowball effect where your money grows faster over time. The longer you stay invested, the more you can benefit from compounding. That is why starting early is such a big advantage. Alright, before we wrap up, let's talk about some common mistakes to avoid. First, don't try to time the market. Predicting short-term market movements is extremely difficult, even for professionals. Instead, focus on your long-term goals and stick to your investment plan. Another mistake is letting emotions drive your decisions. It is easy to get caught up in the excitement of a rising market or the fear of a downturn. But emotional investing can lead to poor choices. Stay disciplined and make decisions based on facts and your investment strategy. Also, watch out for overtrading. This is when you buy and sell investments too frequently. It can rack up fees and eat into your returns. Remember, investing is not about making quick profits. It is about growing your wealth steadily over time. Lastly, keep learning. The world of investing is always evolving, and staying informed can help you make better decisions. Read books, follow financial news, and consider joining investment forums or communities. The more you know, the more confident you'll be in managing your investments. And there you have it. A comprehensive guide to getting started with a stocks and shares ISA in the UK. Remember, it is all about taking that first step and getting your money to work for you. Whether you are saving for a rainy day, your dream home, or retirement, a stocks and shares ISA can be a powerful tool in your financial arsenal. Thanks for sticking with us through this guide. We hope you found it helpful and inspiring. Investing might seem daunting at first, but with the right knowledge and approach, anyone can do it. Good luck on your investment journey, and remember to enjoy the ride. Who knows, you might just discover a new passion along the way. If this guide helped you understand stocks and shares ISAs, like the video and subscribe for simple UK investing content. Comment your questions below, and share this with someone who's just starting their investing journey.